Good morning, everybody. So on this video, I'm going to show you how I use trading chart patterns and specifically channel patterns to get an edge in the market. I'm going to show you how I draw them correctly. And I'm also going to show you how to use candlestick patterns to understand whether the market is likely to be a big day or a small day, which would help you with your edge. By identifying patterns, you're going to have probability on your side. Let's start by identifying how to draw a channel pattern correctly. I try and identify areas where the market might be reacting as support and resistance. So if we take this example here, I'm going to take a line and I'm going to draw it right here. So as you can see there, this market is reacting perfectly in this area. Now, what I'm going to do is select the line. I'm going to hit Control. And I'm now going to use this same line and identify if we can get at least 3 touches somewhere else. So we have 1, 2, 4 touches where the market also stops. So we can use this line as well, because if the market comes back at some point, this now might act as resistance like it did here and here. And then I'm going to take the same line, I'm going to select it, hit Control, move it up. And then look, we have 1, 2 touches. And then we'd be looking for the 3rd touch to be our trade. So that's how I use channel patterns to identify in advance where the market might react. Now, in the second part of this video, I want to show you something that very, very few people are looking at. And that is studying the size of the candles. Specifically, I want us to focus on large candles, okay? If you look online, you can see multiple candle patterns, the evening star, the morning star, all these kind of reversal patterns, shooting stars and whatever. And they're great, okay? They are okay to use, especially because when you're new at trading, you kind of want a pattern that you can recognize, and that will allow you to make more informed trading decisions. What people don't do is, they worry too much about the name of the pattern or what it's supposed to do, but actually you should try and study what is actually happening on the chart. So specifically, I noticed something interesting on the Kiwi dollar this morning. And that is, when we have a really large candle, the next day's candle tends to be a small candle. And it tends to be a candle that goes a little bit lower and then goes higher. Now, I'm going to show you exactly what that looks like on the chart in just a moment. But can you see how valuable that can be? Because immediately it gives you a really good plan for the day, right? So if you think, okay, it's had a really big day, based on recent big days, this is what normally happens, okay? These patterns, very, very few people actually trying to spot. Let me show you. So if we take an example of a large red candle here, you can see that it's bigger than normal. In fact, we'll start from this one over here. So here, a big, large red candle. What happens the next day? We get a small green candle, large red candle. What happens the next day? We get a small green candle, goes a little bit lower and then responds and pushes up. Large red candle, we get again a little push lower and then bounces higher. Large red candle, another small candle, and then eventually bounces higher. Large red candle, a small green candle, and look what we have today, large red candle. So here's what I'm going to be doing. I'm going to be anticipating that the market's going to eventually do a small candle that's gone a little bit lower and is probably going to bounce higher. And that allows me to plan ahead. So then what I'm then doing is, so this is a daily chart, okay? what I'm then doing is I will then go study my lower time frame charts, like the hourly chart, the 4-hour chart, and I start to mark areas where this market might bounce and where I might want to buy this market. So that is basically how to use chart patterns and also how to recognize candle patterns specifically. You know, what happens the day after or the hour after a big candle, as an example. And if you start to look for these clues, what you're doing is you're improving the probability of your trade working, and you're filtering out where you should be focusing. Because naturally, what we normally do is we say, well, the market's going down, the market's trending down, we should then be looking to sell. Well, sometimes that is the case, you know, and when you look at, for example, let's take, you know, this hourly chart here, you can see it's in a really strong downtrend. And I'm not saying you can't sell it, but what I am saying is when you look at that pattern on the daily time frame, it's telling us, hey, don't expect this market to go much lower, because based historically that we've taken 5 or 6 examples there, the next day is a small bar and it's more likely to actually bounce up. And you can actually even see it right now. It's starting to hold there. So it's really important that you learn to start looking for these clues. Let me know in the comments, guys, what you think. Make sure you hit the like button and subscribe to our channel for more valuable content. Have a good one. Take care.